Have you ever wondered what really happens behind the scenes when your bank updates foreign exchange rates? Every day, millions of people open their banking apps and see small changes, numbers shifting by fractions of a cent. But recently, some sharp eyed customers noticed something different: maintenance alerts, missing currencies, quiet system updates that raised a big question. Are US banks preparing for something major in global currency markets? Today, we're going behind the curtain inside how bank exchange systems actually work, why currencies like the Vietnamese dong are drawing attention, and what these updates really mean for you. Welcome back to the channel. In today's episode, we're breaking down the truth about foreign exchange systems in US banks. You've probably seen posts or videos claiming that certain currencies are about to revalue or skyrocket overnight. But how much of that is fact, and how much is hype? To find the real answer, we're starting at the foundation: how exchange rates are actually set and what role banks really play in that process. Once you understand this, you'll be able to separate financial reality from rumor every time you see a viral post. Let's start with the basics. Every US bank that deals with foreign currencies connects to a global network of exchange rate feeds. These rates are updated constantly, sometimes several times per minute, based on data from international financial markets, central banks, and currency trading platforms. Institutions like the Federal Reserve, the IMF, and global clearinghouses provide reference rates that banks use to set their internal prices. When you buy or sell foreign cash at your local branch, the rate you see is actually based on a mix of wholesale market data, internal markup, and transaction costs. Now, here's something most people don't realize. Banks don't decide the value of a foreign currency. They react to it. The real value of a currency like the Vietnamese dong or the Iraqi dinar is determined by international markets and the policies of that country's central bank. When those governments adjust monetary policy, for example, by changing interest rates or managing reserves, it influences the exchange rate naturally. So, when you see maintenance messages or temporary updates on bank websites, it doesn't automatically mean a revaluation is happening. Often it's just part of routine data synchronization. But why is the Vietnamese dong specifically getting so much attention right now? It's because Vietnam's economy has been growing steadily for years. The country has become a major hub for electronics manufacturing, textiles, and exports across Asia. Companies like Apple, Samsung, and Intel have expanded operations there, and that's made analysts and investors take a closer look at the dong's long-term potential. While it's still a tightly managed currency, its stability and Vietnam's rising trade strength make it an interesting case study in global finance. Here's where the misunderstanding often happens. When banks perform software or rate updates that include currencies like the dong, it can look to the public like something big is about to happen. Screenshots circulate online showing foreign currency lists being updated, and people jump to conclusions. But in reality, these updates are a normal part of how digital banking systems operate. Banks must routinely refresh data feeds, compliance tables, and anti-fraud checks for every currency they recognize, even if they don't currently exchange it for customers. To put it simply, a currency being listed inside a bank's system doesn't mean it's tradable. It just means the bank's backend database includes the code for that currency. Think of it like having an app installed on your phone that you haven't opened yet. It's there, it's recognized, but it's not active. Banks include hundreds of global currencies in their systems, and many are marked as inactive, restricted, or for internal use only. That's standard operating procedure, not a secret revaluation signal. So, what would have to happen for a bank to start offering public exchange for a currency like the Vietnamese dong? First, the Central Bank of Vietnam, called the State Bank of Vietnam, would need to adjust its policies to allow broader international trading access. Then, the new rate would have to be officially published through global market channels. Only after that can US banks update their systems to reflect the new rate for customers. Until that happens, no commercial bank can legally offer an exchange outside of existing approved channels. It's also important to remember that large U.S. banks like Chase, Wells Fargo, and Bank of America follow strict regulations from the Federal Reserve and the Office of the Comptroller of the Currency. They cannot speculate on or pre-announce exchange rate changes. Every foreign exchange rate they display must match verified global data. So when you hear claims that a teller or insider confirmed a pending update, take that with caution. Banks don't share that kind of information publicly because they are bound by federal confidentiality and compliance rules. Now, let's zoom out and talk about the bigger picture. The reason global currency systems have been seeing more frequent updates recently has to do with digital modernization. Since 2023, many U.S. banks have been upgrading their FX foreign exchange infrastructure to handle faster cross-border transactions. That includes aligning with systems like Swift GPI, ISO 20022, and new blockchain-based settlement platforms. When banks update their internal frameworks, you'll often see temporary outages or under maintenance notices in customer apps, not because a revaluation is coming, but because the technology is evolving. For Vietnam, the modernization trend is equally strong. The country has been integrating digital payment systems, strengthening anti-money laundering policies, and improving transparency in its financial sector. These are the exact steps a nation takes when it wants to deepen its global economic ties. That's one reason financial observers are optimistic about Vietnam's growth, not because of sudden currency jumps, but because of solid, measurable reforms. Let's talk about what all this means for everyday people who hold foreign currency. If you've purchased Vietnamese dong or other exotic currencies as a form of speculation, remember this. Currency trading is risky and unpredictable. Exchange rates are influenced by complex global factors, interest rates, inflation, trade balances, and investor sentiment. The best approach is to treat foreign currency like any other investment. Research it carefully, understand the risks, and never rely solely on internet claims or unverified predictions. You might be wondering, if banks can't talk about upcoming rate changes, how will we know when something official happens? The answer is simple, through verified public sources. When a central bank changes its exchange rate or monetary policy, that information is immediately published on official government websites, financial news outlets like Bloomberg or Reuters, and reflected in live market data. If you don't see it there, it's not official, no matter what screenshots or rumors might be circulating online. Another key point, banks don't profit from holding currencies like the dong or the dinar, waiting for them to revalue. Their business model is based on facilitating transactions, not speculating on exchange rate spikes. That's why it's important for people to distinguish between bank operations and online currency speculation. Financial institutions follow data, compliance, and risk management protocols. They don't gamble on rumors. Now, let's explore what actually drives a currency to strengthen in value. It's not secret decisions or behind-the-scenes switches, it's economic performance. A currency rises when the country's GDP grows, exports increase, inflation stays low, and investors have confidence in its future. Vietnam, for example, has been working hard on all of these fronts. The State Bank of Vietnam's steady approach has helped maintain stability, which is exactly what international partners look for before increasing currency exposure. So, what about the connection between the US and Vietnam's financial systems? Over the past decade, economic ties between the two countries have deepened significantly. The United States is one of Vietnam's largest trading partners, and both sides benefit from stable currency relationships. That's another reason why U.S. banks keep the Vietnamese dong listed in their databases. It's a recognized international currency, even if retail exchange access remains limited. Some viewers might ask, if everything's regulated and transparent, why do rumors spread so easily? The answer lies in human psychology. People love the idea of hidden opportunities, the thought that they might be early to something big. Unfortunately, that mindset makes many fall for financial misinformation online. Currency revaluation stories have been circulating for decades, often without evidence. That's why it's more important than ever to rely on verified, publicly available data instead of anonymous claims or insider chats. To stay informed, the smartest thing you can do is follow credible sources. Track official statements from the State Bank of Vietnam, the International Monetary Fund, and your local financial institution. You can even use legitimate exchange rate trackers that update in real time. This way, you'll always know the actual market value of any currency, not just speculation. Let's circle back to the main question people keep asking. Are US banks preparing for a Vietnamese dong exchange? The truthful answer is US banks already handle foreign currency exchanges every day, but only within the limits set by international markets. If the dong ever becomes more widely traded, those same banks will simply update their systems accordingly. There's no need for secret preparation, it's just how global banking works. Every system update or software patch is part of keeping that process efficient and secure. If you're a viewer who's curious about investing in foreign currency, remember that knowledge is your best defense. Understand how central banks manage their exchange rates, learn what influences currency movement, and always use licensed dealers if you choose to buy or sell. Avoid anyone promising guaranteed profits or upcoming revaluation dates. Legitimate opportunities never need hype, they rely on facts. We're living in a time when global finance is changing fast. Countries are modernizing their monetary systems, digital currencies are emerging, and banking networks are being restructured for speed and transparency. That's exciting, but it also means misinformation spreads faster than ever. So, the best way to stay ahead is to keep learning, stay skeptical, and rely on credible, verifiable information. As we wrap up, let's make one thing clear. There's nothing secretive or magical happening behind the screens at your local bank. What you're seeing are signs of progress, modernization, compliance updates, and improved systems for the next generation of global trade. And yes, that includes currencies like the Vietnamese dong, which reflect the growing strength of Vietnam's economy in a connected world. So, next time you hear someone claim that a hidden revaluation is just around the corner, take a breath, look at the real data, and remember what we've covered today. The truth is much simpler and far more interesting than the rumors. The world's currencies are constantly moving, evolving, and adapting. But it's not luck or secrecy that drives those changes. It's economics, policy, and progress. If you enjoyed this breakdown and want to stay informed about real developments in global finance, hit that like button, subscribe, and turn on notifications. Here, we focus on facts, not hype, so you can make smarter decisions about your financial future. This has been Inside Access, and remember, in a world full of speculation, truth is your best investment.